A very warm welcome to IDFC First Bank presents Leaders of Tomorrow Season 13. I'm Ritwika Gupta. As we count down to the Leaders of Tomorrow Season 13 awards, we are bringing you a special pre-award series, conversations around the three big pillars shaping India's entrepreneurs and MSMEs today: climate, policy and AI. Yesterday, we looked at climate as a business reality. Tonight, we turn to policy, the rules and reforms that can either enable growth or hold entrepreneurs back. And joining me to decode these are Nikita Bose, National Head Government Coverage, Invoicemart and Business Mentor Startup India, and Professor Bhagwan Chowdhry from Indian School of Business, ISB, and Faculty Director, Venture Immersive. Thank you, Nikita. Thank you, Professor Chowdhry, for joining us today.
Pleasure to be here too. Thank you.
Thank you. Thank you, Ritwika. Thank you for having me here.
So policies often sound promising, but I want to start this discussion by looking at the barriers first. So first, a common question to the both of you. In your view, what is the single biggest structural barrier to growth for India's MSME today? Let's start with you, Professor Chowdhry.
You see, entrepreneurship comes easy to Indians. Everywhere you go, people are, trading, setting up shops, doing stuff. The number one problem for them to grow is the working capital issue. There's a lag between when you are able to collect money versus when you actually have to buy and provide the goods. The working capital situation is very, very fragmented.
Right.
And it works through an informal basis. But I think if we can crack that piece of how to be able to provide working capital in a reliable way to MSMEs that is credible, that will not disappear at the wrong time, that will do a big, big service to the MSMEs. And the second thing, of course, is the ease of doing business. The regulators have to make it easy for you to set up your business, remove all hindrances for setting up businesses, and very importantly, ease of closing businesses. And I cannot tell you how many startups have told me that we set it up, but it's taken us years to close the business down. So you see, if I can't close a business down, I'm not going to start it. So both the regulatory cholesterol has to go down, and in terms of financing, if we can fix the working capital, I think that would go a long way.
Nikita?
Right, Ritwika. So if I had to, pick one structural barrier out of so many you might know, it would be the chronic cash flow instability, which is actually caused by the delayed payments, right? And there would also be the absence of the cash flow based financing. So, Ritvika, I believe that India has no dearth of entrepreneurial energy, right? MSMEs have demand, they have skill. They are also getting increasingly access to markets as well. Yet, there is a large number of the micro, small and medium enterprises, the MSMEs, as we say. They operate in a very fragile cycle, I would say, right? Where, the receivables are uncertain. The payment timelines are stretched. The working capital is always under stress, right? So imagine like I am a small MSME, right? And I am, for example, supplying stationery. I am maybe supplying pet water bottles. My entire survival works on, the smooth flowing of the working capital I'm getting. The moment I, sell and I get the payment, that cycle is, if it is disrupted even by one or two delayed payments, my entire calculation goes on a toss, right? So even a profitable MSME can collapse if the payment is delayed by a few months. So the real constraint is actually not the intent or the policy. I would say it is the predictability, right? MSMEs need assurance that if they produce, they supply on time, they will get paid on time, right? And they can access affordable credit against the invoices that they have. Until this is fixed systemically, I don't think MSMEs are going to, become growth oriented. They will always remain survival oriented, right? So this is it from my side, Ritvika, on this. Yeah.
So Nikita, coming to you first, the idea of creating champion SMEs through a 10,000 crore growth fund is ambitious. Tell me what separates MSMEs that scale successfully from those that stagnate? Can this policy realistically help bridge that gap?
Having worked very closely for the MSMEs, within being in the government while working in the Ministry of MSME, while designing schemes, policies, etc., and now being on the ground, helping them access finance, I have very clearly seen what separates MSMEs that scale from those that stagnate, right? So honestly, the actual difference is rarely the talent or the hard work, I would say, right? This is my personal opinion. I think it is the readiness to transition. And I've always, told about this Darwin's theory of evolution that has worked for the humankind. It actually works for the MSMEs as well, right? So transition from what? Transition from an owner-driven business to an institution-driven business enterprise is something we should be looking at, right? So MSMEs that successfully scale, I will tell you what is the difference actually. What is the difference in the psyche of an MSME that successfully scale? They actually are willing to invest into formal systems like, transparent accounting, compliance, governance, technology, professional management. There are also cases then where we have seen that they're open to patient capital, they're open to mentorship, and sometimes also it is very intelligently seen that they also believe in giving the dilution of control to enable long-term growth. So MSMEs such this, they actually view capital not as money, just as money. They actually see capital as an enabler of their own capability, right? And on the other hand, I'm talking about the other class of MSMEs. Many MSMEs remain stuck because they are, first of all, they rely completely on debt, right? And secondly, their decision making is mostly promoter centric. They hesitate to professionalize. In that case, growth just becomes a matter of stress than a matter of strategy, right? So now this is where this idea of 10,000 crore growth fund is emerging out, and it is emerging out as a very, very powerful tool.
Professor Chowdhry, coming to you, with public capex rising to 12.2 lakh crore and deeper corporate bond markets on the agenda, how do you see India balancing growth-led borrowing with financial stability in a volatile global macro environment?
This is a really good question. I think for a growing country, infrastructure investments are a big deal. And as we look forward to more growth and richer country with richer consumption profiles, more capex need to be spent. But we have spent almost all our time thinking that this needs to be financed with debt. And with debt, there are many problems. There is a maturity issue. If this is a really long-term project, can it really be financed with short-term debt or not? The answer is no. That's very, very risky. And long-term debt is very hard to come by with just private players. I think we need to change our mindset. We need to think about financing infrastructure with equity. You see, if there is a good idea that is likely to be a long-term idea that's going to generate revenues in the future, I may be very reluctant to lend money as debt, but I may be okay in terms of sharing the revenues, sharing the profits, and that requires more equity-like investments. And we have not spent a lot of time thinking through this, how we can incentivize equity-like investments in which I partake in the future revenues and future profits to finance the projects today. And I think we need to do a rethink on that.
It's time for a quick break here. We'll be back shortly. Stay tuned. Welcome back to IDFC First Bank Presents Leaders of Tomorrow Season 13. In the run-up to the awards, we are spotlighting three key pillars shaping India's entrepreneurs and MSMEs: climate, policy and AI. Tonight, the spotlight is on policy. Listen in to our discussion. Now, Nikita, bringing you in here, digital tools and fintech are changing how businesses operate. What opportunities and risks do you see for MSMEs in adopting digital finance and tech solutions?
Right. So when we're talking about digital tools and fintech, right, and this is one area where I am very deeply optimistic about the MSME's future in India, because digital finance is actually changing the rules of the game totally. But I would also say that the digital finance is not an only silver bullet for MSMEs yet, right? It is creating some very clear opportunities, but also it is introducing a lot of new risks that the business houses must be aware of, right? So when I come to talk about the opportunities per se, the biggest opportunity for the MSMEs is the faster access to the working capital, right? So this is a much talked about the trades. The budget has been talking about this year. So trades is for the benefit of the audience, it is trade receivables exchange discounting system, right? It is an RBI regulated platform, and MSMEs can get their invoices discounted and approve the invoices and receive funds without collateral, especially while supplying to a PSU or a large corporate. I have talked about the opportunities here. Now let me talk about the risks that are, coming on the way. And this is very important for all the MSMEs to understand that easy access to credit can lead to overborrowing. Right. So this is a concept where the MSMEs sometimes fail to understand ki kitna paisa chahiye, how much is the credit that I require, right? Especially when the MSMEs do not fully understand the pricing, the tenure, the repeated, the repayment obligations that come, right? So this is very important to understand that MSMEs do not understand ki, it is very easily available to borrow. Let me borrow, and they end up into overborrowing, right?
Professor, coming to you, India is pushing strategic manufacturing from pharma, textiles to semiconductors. From a global competitiveness standpoint, where should India compete head-on, and where should it collaborate globally instead?
I tend to be a globalist. I think we should always have a global view. I think the manufacturing where we need to invest should be focused on where there is enough local demand, because then sustains it. Then you can set up manufacturing that is local because it will serve the local market, but not in a protectionist way. Because if you do it in a protectionist way, we won't get the efficiency. We won't get the right prices. We have to be competitive so that the quality that we are producing is globally competitive. So we have to leverage this idea that even though what we are producing is enough to satisfy local demand, it is good enough to be sent to another countries. It's good enough to go to Southeast Asia. It's good enough to go to Middle East. And then that, I think, requires a balance of both global and local. I don't think by Make in India, we can go back to the time where it means that we stop the competition, be protective, and then, protect our industries to be inefficient. I don't think that is going to work. We have to play at the global world stage. Yes, manufacturing for local is important, but we should be good enough that our products are seen as competitive and high quality, even globally. And we were able to do this with IT. IT is a great example, great success example in India, that we started here, but our products are so good that, the TCSs and the Infosys of the world are now serving the entire world. And I think we need to have a similar view with other manufacturing things as well.
Nikita, coming back to you, now women-led enterprises often struggle not just with finance but access to markets. Last year, around 24,000 women-led MSMEs shut shops. Do you see She Marts as a starting point for building scalable women-owned brands?
Right, Ritwika, and talking about women entrepreneurs very close to my heart. When we talk about women-led MSMEs shutting down, The numbers are worrying, absolutely. The numbers that you told are really, worrying. But behind those numbers, I would say there are real stories, right? So women who built businesses alongside, households, caregiving to their family, to their children, and living up to all the social expectations that are there, only shut shop because their product was bad. I would say this is not the answer. I would say they actually couldn't find markets, right? So I think finance is very important.
Sure.
A lot of women entrepreneurs are availing a lot of facilities. A lot of schemes driven by the government of India are for women entrepreneurs to access finance. But I think the bigger struggle is visibility and access. Getting a shelf space, finding buyers, building trust, that timeline has to be given, and sustaining a lot of demand for the produce that they are doing, right? And that is where I think the initiatives like SheMart is coming out, and it is coming out to be a powerful tool, I would say.
Professor, I want to bring you in here now. This year's budget signaled a renewed focus on the orange economy, media, creators, culture, and soft power. Do you think India can turn creative capital into a serious economic engine?
So, if you think about it very narrowly and say, what is this going to produce in terms of GDP? It may not be big. But the way to think about it is that these are creative endeavors and they require the use of technology, increasingly so. So, as we become good at it, our human capital is going to increase. And I think that might have spillover effects that are large. So let me give you an example. If I learn how to make videos quickly, right? It seems like a very local thing. But in the process of doing it, I may learn how to use AI models. And as we get trained to use AI models, we can do other things that would be of use to people all over the world. So I think if you focus only narrowly on the local thing, it doesn't look huge. But if this is a way to acquire skills, to acquire human capital, and be at the cutting edge of technology, then I think it is going to have a bigger impact.
And finally, before we wrap up today's discussion, a question to both of you. With the India-EU trade agreement being called the mother of all trade deals and the India-US trade framework seeing reciprocal tariffs on Indian exports lowered to 18%, what does this moment mean for India? And what macro risks should Indian entrepreneurs and businesses be actively hedging against over the next 3 to 5 years? Let's start with you, Nikita.
Right. So, Ritwika, again, I would, share my disclaimer on this, that this view is totally my opinion, right? And what my opinion says is, given the current situation on the geopolitics that is happening, the next few years will actually test the MSMEs in the ways that we haven't seen before, right? The risks are not abstract, honestly. They will show up in terms of cash flows, they will show up in terms of costs, and they also will show up in terms of a lot of confidence, right? So the first big risk is uncertain and expensive capital, right? Interest rates are, they are remaining globally volatile. MSMEs that depend on one lender or, a short-term borrowing, they can, suddenly feel stress. Businesses actually need, stable, predictable sources of income and not just, quick loans, whatever is readily available. And they don't get a chance to negotiate with regards to the rates, right? So this is one. The second important thing, risk that would come out, that is from my side, my opinion, is that there might be a situation of a supply chain shock, geopolitical tensions, climate disruptions, and, trade realignments happening. They all can delay raw material, raise costs, maybe disrupt exports, right? So MSME is relying on one single supplier. All markets are more vulnerable. Resilience now means not putting all your eggs in one basket, right? So this is two. And three would be, the formalization pressure.
Sure, Professor Chowdhry.
So I think free trade agreements, especially the EU agreement, is a great deal for India. It's a great improvement, I think, also because of the geopolitical uncertainty. So I'm glad that we got the India-US agreement as well. But I worry about it. Is that stable? When would President Trump change his mind and say, now I'm imposing another 50% or 100%? So we need to diversify. And I think for that, the EU free trade agreement was a great idea. In terms of what macro risks to hedge, I think we are still a net importer of energy. And energy risks, I think we need to think about in a long-term way. So I'll give you an example, and that should happen not just at the level of an individual company or manufacturer. As a country, we need to think about it. So about 10 years ago, a few of us from ISB professors met the finance minister, Nirmala Sitharaman, and she asked that question. What do you think I should do for energy and oil? And the oil was trading at about $40 a barrel. And we told the finance minister, this is a good time to hedge that risk. Now, whenever I say hedge, people think of it as financial hedge, that, go and buy futures contracts or forward contracts. But I think we need to think beyond, not just forward and futures contracts, because they tend to be short term and they tend to be, have all kinds of issues with volatility and margin requirements. We need to think about operationally hedging it. So if I know over the next 10 years, my demand for energy are going to be something, we need to buy that oil today or have an agreement to buy that oil today. But how do you buy oil today and how do you store it? Well, you have to store it in the most efficient way. What's the most efficient way of storing oil? The most efficient way of storing oil is to not take it off the ground. Let it be inside the ground. So what that means is maybe we should be buying oil companies or oil fields outside. That's an operational hedge. And I think this is a good time because there are many countries in the Middle East who are trying to do the opposite. So the sovereign wealth fund in Saudi Arabia is trying to do the opposite problem. They're worried about, what am I going to do with all this oil? And I want to shift it to something else. So I think we should be net buyers of oil properties abroad. And I think that is one way to manage that risk.
Well, this was a wonderful discussion. Thank you so much for your time.
Thank you.
Well, thank you.
And with that, it's a wrap on this edition of IDFC First Bank Presents Leaders of Tomorrow Season 13. We hope you enjoyed the episode. Thank you for watching. Goodbye.